What I spoke about earlier, that was the fundamentals behind all the huge demand for physical commodities, because prior to the world splitting apart into a multipolar world, America didn't need to care about the supply chains. It just printed the money, borrowed, and bought all the natural resources it needed. And it kept a strong military to impose that. But we know that now is like ending. Friday, January 16th, 2026, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at natural resources or minerals or rare earths in general today. We're going to focus on silver a little bit, and we're going to look at how the United States has squandered a lot of treasure, unfortunately, and has very little to show for it. And I think that's why there's such a desperation to secure new supply chains of natural resources. We saw what happened in Venezuela. We saw what's happening vis-a-vis Greenland. We are seeing what's happening in the Middle East vis-a-vis Iran. It's all got to do with the natural resources. We also going to look at some long-term charts of silver and gold today. Yes, there's been a lot of volatility, especially in silver. The paper boys are still fighting their losing battle, throwing paper at it overnight in the thin markets. But the physical demand is just overwhelming. And that's why we're going to look at the charts as well, so you can keep a macro or a bird's eye view picture of what's really going on. But before we start, just wanted to give a quick shout out to one of our long-term affiliates, Dirty Man Safe. So what is Dirty Man Safe? Well, it's a way to hide, secure, and retrieve your valuables with ease. You'll go underground for the ultimate safekeeping and concealment solution of portable assets in the US today. They also ship overseas to Europe. So I'm going to put a link below in the description. Well, it's always there anyway. It's a link to a landing page about Dirty Man Safe, and you get 10% off by using my landing page. So I want to start, as we're talking about natural resources, securing the supply chains. We're talking about the dollar, of course, as well, and how much treasure the United States has spent in foreign wars that actually have resulted in very little gain. Like if you look at Afghanistan, the U.S. was there for 20 years and it left. Iraq, it spent trillions there too, and things are not really secure there, I would say. But I want to refer to a summit that there was between Saudi Arabia and China back in December of 2022. And I remember talking about that. And at the time, people like me and others were saying this was a blow for the petrodollar, and it was. And this is a big part of what's happening now, why the U.S. is so desperate to secure oil deals, or even do what they did in Venezuela vis-a-vis the leadership there and the oil reserves, and why the U.S. is so desperate as well to get a hold of Greenland, right, and also all the instability it's trying to foment in Iran to basically affect the regime change there, because Iran would be massive in terms of getting them back to deal in dollars, for example, and having a puppet there running the country that would be subservient to the U.S. And I think what's happening in Iran, I hear that the U.S. has decided to hold off, so we don't even know if they're going to be able to do anything. But this article here from 2022 mentions the fact that there was a summit, a 3-day summit between the president of China. He went to Saudi Arabia and visited the Kingdom of Saudi Arabia for 3 days. And yes, it says here on December 8th, Chinese President Xi Jinping and King Salman bin Abdulaziz Al Saud signed a comprehensive strategic partnership agreement at Al Yamama Palace, where Crown Prince Mohammed bin Salman hosted a lavish reception. The same day, state media, Saudi press agency, reported that China and Saudi Arabia had signed 34 investment agreements on the previous day within the framework of President Xi's visit. The agreements cover several sectors in the fields of green energy, green hydrogen, photovoltaic energy, information technology, cloud services, transportation, logistics, medical industries, housing, construction, factories. The SPA did not elaborate on details. And more importantly, it says, beside these 34 agreements, Saudi state media stated that China and Saudi Arabia were set to sign deals valued at around $30 billion on December 8th. A deal over Huawei technologies will bring cloud computing, data centers, and high-tech complex in Saudi Arabia, as reported in Al Jazeera, which attributed it to Saudi Arabia. During his visit, President Xi is attending the first China-Arab State Summit and the China Gulf Cooperation Country Summit in Riyadh. Leaders from the Arab world in attendance at the summit include Egyptian President Abdel Fattah el-Sisi, Kuwait Foreign Minister Salem Abdul Al-Jaber. So you get the message. This was huge. And people like me and others in the alternative space were saying this is a threat. This is a big threat to the petrodollar. And if you don't know exactly what the petrodollar is, I have a petrodollar playlist I'm going to put up here. And you need to have a look at that, because basically, in a nutshell, it's a deal the U.S. made with Saudi Arabia and OPEC back in the mid-'70s that they would only deal in dollars. So that kept the demand for dollars. But now this has been diluted. And it's a big part of what's happening in the Middle East, why they want to disrupt Iran and get Iran back on the U.S. sphere of influence. It's been out of the sphere of influence since 1979, of course. And they tried it with Iraq. Saddam Hussein was going to sell a lot of his oil in euros, so they got rid of him. But if anything, they've made Iraq a lot more unstable. If anything, Iraq is more closely allied now to Iran. They spent trillions, of course, in Afghanistan, and they've got nothing to show for there. As I look here at the U.S. debt clock page, defense spending now is $926 billion a year. Interest on the national debt, that was $984 billion a year, and it's expected to rise over $1 trillion in the coming years. So you can see why the U.S. is desperate, and I think President Trump and his administration are showing it, because they've even proposed to spend another $500 billion in defense. They know that the U.S. has squandered a lot of treasure and lives, unfortunately, in these foreign wars. And they've got very little friends that have a lot of resources. So that seems to be the problem. And I think what they have a lot to show for, of course, is debt. Not just the national debt that's approaching 39 trillion here as I look at the debt clock, but also a lot of corporate debt, consumer debt, derivatives debt, actually going into the quadrillions, right? And the world, of course, is splitting apart. The U.S. is not the single power. It's not a unipolar world anymore. And even Marco Rubio, the Secretary of State, admitted that last year when he was appointed, that it's a multipolar world. So, and that's got all to do with silver as well. I've looked here that silver, for example, the U.S. depends on 67 to 80% of its silver is imported. So there's a big problem. And we're also seeing that India, for example, has upped its purchase of silver. I've got a chart here from Tavi Costa. India's silver imports at record highs, 4-month rolling changes in millions of dollars. So yes, they're buying billions of dollars of silver. Yeah, it's a record. And I've been speaking about this. My source has said that India has been the biggest silver buyer. And we're also seeing the Gulf cooperation countries that are, well, Saudi Arabia is part of, and they're now part of a deal, strategic deal with China. They're buying a lot of gold and silver as well. They're part of the Belt Road Initiative with China, and that's a big challenge to the U.S. And if you look at the map of the world and you look at Iran, where it is, it's right in the heart of the Belt Road Initiative. And I think that's one of the reasons why the Trump administration or the neocons, some people think they've got a hold of him, they've got something on him, and they're pushing him to act in a bellicose way. Well, it's all about natural resources, I would say. And China as well. The U.S. depends on, well, at least until 2 or 3 years ago, it might have changed, but the number is still huge. 80% of the rare minerals that the U.S. needs, not just for the military, but for AI and high tech, come from China. So the U.S. is realizing, and I think is a little belated, really, that it really needs to get its act together in terms of exploiting rare earth minerals, natural resources. And that's why President Trump, when he came into office, almost a year ago exactly, started signing all these executive orders about the topic. So now let's look at the charts. I told you we're going to look at some charts because there's been a lot of volatility in the market. Yesterday, silver was smacked down to like 86, I think, overnight. And overnight is the best time for these retreating bullion banks to attack the market, because of very thin market conditions. They're able to trigger stops, and people just start selling. They know the central banks are coming as well, so they kind of front run. But we saw later in the day that the physical market is just on fire, and we even went back to like 93 at the end of the day, and we settled above 90. And I wanted to talk a little bit about what's going on in January, because sometimes it feels negative, doesn't it? But silver settled 2025 at 71.64, and as I speak here, it's 7:30 a.m. London time. Silver is just trading around 91, slightly below, but let's use 91. So if you take the close from 2025 and you calculate the performance already for silver, it's 27% in a couple of weeks or so. And we've been told, of course, by mainstream financial institutions, the bankers, brokers, and also mainstream financial press, that silver is going to collapse. There's going to be a rebalancing. And that's why I want to show you the long-term charts, because that helps you put things into perspective. And also what I spoke about earlier, that was the fundamentals behind all the huge demand for physical commodities, because prior to the world splitting apart into a multipolar world, America didn't need to care about the supply chains. It just printed the money, borrowed, and bought all the natural resources it needed. And it kept a strong military to impose that. But we know that now is like ending. And it's a huge problem for America. And that's why I think the bullion banks, not just in the US, but in Europe, they're not prepared for this. They haven't done their homework. They don't realize that we are in a brave new world where paper won't do. We need the physical. So we're going to start with a simple chart, a weekly chart of gold. And it's not very long term, of course, but even this weekly chart shows that all the like volatility we see day to day, yes, it's a bit, well, if you watch the markets, you get a little bit worried. But to me, this chart looks still very positive. This weekly chart, we are at all-time highs, basically. And then if you look at the monthly version of the gold chart, and you go back a little longer, like into the 80s and the all-time high in 1980, the all-time high in 2011, you can see how important the break back in, let's see, November 2024, when we broke above, or it was October, November period, when we broke above this trend line. I said this was very significant, and I was looking at that trend line because I knew that was an important level, and it was around 2,700, and we broke through it, and then it came back to retest the breakout right after the election of Donald Trump. And then that's typical of technical analysis, and it shows that there's a strong market, and it breaks out, retests, and then goes back up. So you can see the monthly chart as well looks very, very positive. And if you look at the move from 2001 to 2011, I expect the same kind of move now, and we're about a third of the way, maybe even less, compared to what we did in 2000, from 2001 to 2011. So just wanted to show you that. Where we're going to look at now, well, we're going to look at just a weekly chart of silver. Not very long term, but still, with all the shenanigans going on every day, it seems, it's good to look at this weekly chart. And maybe the bullion banks or the people smacking silver every morning don't look at this to realize they're, in my opinion, they're playing a losing game. And then we're going to look at the monthly one. Of course, the monthly one, we get this mother of all cup and handle formations. Yes, we broke out of it back in October, went up to 54, did the same thing gold did back in 2024, right? It retested the breakout. It was like really a bullish technical event, retested the breakout, came back up and took off. And that's what we've done. And if you compare the move so far to well, what silver did in the 70s and what silver did from 2002 to 2011, we're only about a quarter of the way, right? So still a lot of room on the upside, a lot of time, I think, in this bull market. And yes, there will be volatility in the short term, but I think you need to be mentally tough and sit through those. Don't get too despondent. Don't get too enthusiastic when it goes up as well. I just wanted to look also at S&P versus silver. And this is really interesting. We're starting to break below this trend line that's held since 1980. So very important, S&P versus silver. And that kind of confirms also the Dow gold ratio chart, because we broken the equivalent line earlier. Well, we broke it, let's see, back in April 2025, and then that was a break of a key level, right? And then we retested the breakout and we've come back down. So I think the Dow gold ratio, S&P silver ratio are both confirming this shift away. Is not going to be complete shift. Not all capital is going to go from paper assets or the stock market or bond markets into hard assets and precious metals, but you're going to have a big chunk, big proportion of those assets are going to move over, and it's going to make a huge difference. Yes, gold and silver look like they are overbought, but they are under-owned on a relative basis, and that's what you need to keep in mind. And yes, with that, I'm going to wish you all a very good weekend. Take care. Bye.